Well, let's get straight to what's been going on here on the local equity markets. Pretty choppy, and I've got to say, volumes still look pretty low, at least at an index level. Let's go find out how NabTrade customers have been playing it. For that, we welcome back to the show Gemma Dale from NabTrade, who joins us today via Skype. Gemma, it's great to go and see you there. What have the customers been doing at the moment? Because it's been very choppy, lots of noise, but not a lot of direction.
Yeah, no, most of our guys are basically just sitting on their hands at the moment. They're feeling really uncomfortable about this market. Your former strategist who was just speaking then, they know all this stuff. They know that recession's offing in the US. Essentially, you've got this super strong market, crazy low unemployment, rocketing rates, all this stuff, right? Investors know this. It's all in the public domain. They've been hearing it for a while. And it's hard to get excited about a market that's only off 10%. I think the thing that makes our guys most nervous is nothing's cheap, really, not cheap enough. And the things that are cheap for a very good reason. So the zips and the EMLs and the stuff that they previously would have bought the dip on, they will not touch it under any circumstances now. They got out a while ago. They're leaving that stuff alone. And the big stuff that they do like to buy at a discount isn't cheap enough for them yet. So they're getting a little bit uncomfortable presently. And the best way to play in uncomfortable situations is just sit tight.
Yeah, absolutely. I'll tell you one thing that's getting a little bit cheaper, at least from a stock valuation perspective. I'm not sure about the earnings side of the equation. What may happen is the iron ore space. Iron ore prices have now hit 8-month lows, just a bloodbath overnight. Lots of concern about the China's property sector again. What's been going on in the iron ore miners? We can see they're off quite heavily today.
Yeah, the one play that keeps on playing is the Fortescue trade. Our guys just love that and they go hell for leather on it every day. It's a small number of people. They got a lot of money. It's working while it works. And for a little while there, they drifted away. They were just sort of wondering what direction it was going to take and didn't get too excited. And now they're back on it again. They're loving that. So Fortescue is the one trade that you will always see. It's the one consistent trade that they're excited about. Yeah, BHP's in there a little bit. The other one that's a bit interesting is that Rio Tinto's back in. We haven't seen Rio for years. It's not a super popular stock from a trading perspective or even really a portfolio shifting perspective. Most of our guys, if they have it, they just sit on it forever. If they don't have it, they're not particularly interested in picking it up on weakness or anything else. So to see that back in is quite interesting. Most of our guys, if they're going to play iron ore, they play it. If they're not, they've already got enough BHP and they'll sit on that.
Interesting. What about CSL? Now, earlier this week, it was on a winning streak, and even again today, it's up. It's above $290. It's been a big rebound from what we saw a few months ago. What's been going on there? How have the customers been playing it?
Yeah, I love CSL. It's such an interesting one. It used to be, I was telling you guys quite recently, it used to be a really high conviction play for our guys, right? It was a passion stock for those who held it. For everyone else, it was just far too expensive and they would not touch it. Above $300, people are like, nah, that's not for me, right? 3 digits is usually too much for someone to buy. It's just an expensive stock. And so they were not going for it. And then when it fell below 250 in particular, which it did several times post-COVID, we saw just this incredible broadening of the base who held it, right? Massive buying around the 250, 260 mark, broadening it right out. So suddenly people who would never touch it are like, I need to get a bit of that. I saw what happened with CSL over 20 years and I would like to see that happen again. And I can be on that train now that it's not quite so expensive. And so we saw lots of people buying CSL. And now we're starting to see some trimming above 290. That's a nice price for people. So a lot of people are getting out. It'll be interesting to see if it comes back a bit and they jump back in. So it's much more broadly held and people can take profits.
Okay, very good to know. Yeah, CSL up about 0.1% today, $296. So yeah, big move upwards over the past little bit. What about some of the energy sector? We know that it's been very volatile, impacted by recession fears, of course. What's been going on in that space?
Yeah, super interesting again. Woodside is the one, I find this really interesting. We, again, didn't see any trading in it at all up until this year. And then from January onwards, it's obviously been a massive play. Oil price spiked dramatically. It's come back. People are watching the oil price a lot more than they used to. They're far more interested in what's happening in that space, plus picking up the oil and gas assets from BHP. It was also a real passion stock for people with self-managed super funds. They really love the dividends. So it was quite an interesting one. We see banks mostly for the SMSF, but Woodside was in there too. trimming at the moment, which is quite interesting. So they're trimming Woodside and they're also trimming Whitehaven. Both of those have hit numbers that people are pretty happy with, and they'll just take a bit off the table at the moment.
Love the terminology, chewing away there, having a bit of a nibble. What's going on in the diversified financial space? So at the moment, we're getting a lot of quarterlies coming out from the fund managers, the wealth managers and the like. Some are impressing, some are not. What's been going on with the NAB trade customers?
Funds management is such a difficult space, and I find it really interesting looking at what investors are doing with it. Our guys are self-directed, right? So they tend not to hold a lot of managed funds or sort of managed products. They'll have some, and they're certainly buying ETFs now. They're very keen on that, but we don't see huge holdings in managed products, ETFs, and so on. So for our guys to have a play with the fund managers is quite interesting if they're going to buy the stock. So Magellan was obviously a huge one for a really long time. It's been absolutely brutalized over the last year. Watching that stock fall has been quite horrifying for a lot of people. We don't have a huge number of holders. At the moment, there's a little bit of kind of playing at the edges, but it's still people getting rid of it, to be honest with you. The one that's really interesting is Pendal. Pendal's not really ever been in our numbers. It used to be BT Investment Management, so rebranded. They've got some international plays, offshore holdings and so on, offshore fund managers. Quite interesting to see our guys having a little nibble at it, right? So they're kind of looking at some of this stuff now. I was quite surprised. We don't see that very often.
All right, that's interesting. That got a lot cheaper today. Pendal's off about 7.6% as we go to where. Look, finish off quickly. I know you've got some time constraints there. International. You said for the first time in a long time we're seeing sales come through. Is that still the prevailing trend?
Yeah, so fascinating. I think I've said everything's interesting today, but yes, fascinating. I'll say instead of interesting. But international, it's a dramatic shift in terms of how people behave on that side of the platform. It has always been just a slow accumulation, and people put money into international stocks that they're really keen on, and they hold them forever. They don't have very well diversified international holdings. As I said, it's Tesla, Daylight, and then everything else, and they tend to buy something they're really keen on and just hang on to that. We're seeing the opposite at the moment. So we're seeing selling. We're seeing really small trade sizes, really small. You're talking sort of sub $5,000 now, where previously people put 100K behind something. So they're just not enthusiastic about going offshore anymore. You can see people really battening down the hatches and getting quite nervous about where the market is right now. And one of the ways they're doing that is by bringing their money back onshore and putting it in cash, to be frank. They're getting rid of Tesla, getting rid of a lot of that kind of stuff, just not keen to be holding that kind of exposure at the moment.
Yeah, the Aussie dollar's not buying much overseas at the moment, so who could blame them? Gemma, we'll have to go and leave it there, but thank you so much for joining us here on the program. Enjoy your weekend.
You too. Thanks so much.